Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Monday, October 19th, 2015, and this is the daily report for gold and silver. We do have the precious metals complex as a whole under pressure today. Gold currently trading off about $6.5, 1170. That, of course, is spot gold that we are looking at. The low 68.80, so we're just a couple of dollars off the low. The high 78.24. When we look at COMEX gold, off about $13, but of course all of our net changes are the same. Now, on Friday of last week, we did send out a special trade alert suggesting that all of our clients that were in long positions go ahead and liquidate those, pulling profits on our gold trade. Very, very nice trade in at 44, out at 77, 78. On today's show, I want to detail not only the rationale behind getting out, but also looking at where we think the market's going to go short term, as well as take a macro look at the market. So in terms of our overall posture and forecast on gold prices, we are interim term rather bullish on the market. Very, very short term, I believe that we have just headed into a small corrective phase. If we take a look at the trade that we initiated, I believe it was on the 8th of October, market had been trading higher and had been trading off of these lows at about 1100. It found some resistance roughly at, call it 53, 54, and as the market came down, we actually entered roughly at 44, so say right at this point, we were rewarded. The market did genuinely trade and trade to a new high up at around 1190, but if you recall from last week, this is Monday, this is Friday, this is Thursday. On Thursday, we pointed out the fact that we had a doji that appeared in the market, and that in many occasions when we look at the price of gold and the transfer of power between the bulls and the bears, you will get this type of a candle. In other words, a candle in which neither the bulls nor the bears have dominance and control over the market. It's a consolidation or turning point in the market, a potential for warning of a pivot. So we saw the market genuinely track a nice rally, almost $100 on the rally, as I said, from about 1100. And as the market opened on Friday and started to trade under some pressure, we got out roughly at, as I said, about 78 in the market, because it was my sense at that time that we really had the beginnings of this three-river evening star variation. Of course, today's candle is a confirming candle, but we're already out of the market. So in hindsight, I think we got in properly. I also think we got out properly. Now, the question is, where do we think this market's going to track to from here? What lows can we look at, and what should we look to do? My sense is that we're probably going to see a retracement, and in terms of the actual numbers, we'll need to pull up another chart for our forecast. And traders, I have done just that. I've gone ahead and pulled up our daily chart, and this has our current very, very short-term Elliott wave. And what we're looking at in essence is that this was a long third wave up. We are now in a short fourth wave down. That fourth wave could take us to a number of places in terms of the most shallow level of support. Could be found at about 1163. That would be a 23% retracement of the move from approximately 1077 up to 1190. The next move, which I believe is more likely if we get any kind of pressure, is probably going to be around 1145 to 1150. So I think we might see this market dip anywhere from where it's at between, call it $10 and $20. Our sweet spot for entry is going to be right in this area, and we're going to look for key reversal signs that indicate we are bottoming. And at that point, I would look to re-enter the market from the long side to carry us through a fifth wave up. Now, traders, to put that in perspective, consider this. Waves 1, 2, 3, 4, and 5 are all going to be composed of a wave on top of that, and that wave would be a wave 1 progression to the upside. And so that when we take a look at our longer term studies, it will give us a way to have a frame of reference or fill in the blank, so to speak. And so what I'm thinking is, although I'm expecting some downside pressure right now. My sense is that we have probably gone into a wave 1. We are at 4 of 5, so we've got that. When that is completed, or that 5th wave, that will be our 1. We'll get a 2, a 3, a 4, and then a 5. All of that being the beginning of this major 5th wave. So that is why, as I said, longer term, I am bullish on the market. I believe that we have most definitely hit a potential conclusion to the long-standing corrective pattern that has been so prevalent in the market since we were at 1900 all the way down. If that's the case, we truly have some real nice momentum that we can see move back to the upside. However, it is a matter of timing, and as I said, right now, I wouldn't be surprised to see a little bit of correction come into the market. Now, where that will terminate, that's something we'll have to see how it unfolds. As I said, right now we're trading roughly at 1170. We could track as low as 63 or even 45. However, my sense is it will probably get a much shallower correction in the market. And a couple of reasons are, one, I believe that this 63 should hold. That's this former top right in here. So even if it comes down, I believe we'll hold there or somewhere right around this top right in here, which comes in roughly at 1150. So in either case, I am looking for the market at this point to, this is our completion of 3, go ahead and complete 4, and then go into a final 5th wave up. That final 5th wave up should, in fact, challenge this recent high at, call it roughly 1190, and take us to actually test 1,200 per ounce. That would be over the next month to month and a half. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Recommendation right now is to stand on the sideline. Let's get a sense for if this correction wants to continue, where it wants to go, and position ourselves back in the market from the long side. Aggressive traders, you can go short here. However, we are going to simply wait for an opportunity to enter again from the long side. Bye-bye.